All right, let me get this recording. All right, cool. I think we're good to go, and I believe we are live. All right, welcome everybody. Today is October 6th, 2025. This is the Bookmap stream. My name is Spencer Riegle. I am representing DARMA Capital Trading. I'm the chief crypto options trader and strategist here. We hop on each week, or we try to hop on each week to talk about markets. Predominantly what we discuss is Bitcoin and Ethereum markets. So we have some kind of cool things to talk about today, especially in relation to Bitcoin, and then we go from there. So we typically take a top-down approach to markets, talk a little bit about macro, and then we really get into the weeds of it in terms of a weekly outlook, and then some of the microstructure within liquidity on Bookmap. So if you like the stream, feel free to follow me on X, or follow us on X at _RIEGLE or at DARMA Cap Trading. And then if you have any questions, feel free to reach out to me on LinkedIn, Spencer Riegle, or you can do it as well here in the Bookmap Discord. So we have a channel in the server, or in the server as well. All right, so let's jump ahead and let's go through disclosure first. Then we'll get into some house cleaning and some cool things to talk about. But all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, right? And so each week what we talk about first and foremost is risk, right? And the reason for that is anybody that's a trader, anybody that's managing money, whether that be personally or whether that be professionally, your job is risk. And your job exists as long as you can take risk tomorrow, right? And in order to take risk, you need to be risk aware. And so what we talk about in terms of trading is only trading with risk capital. And what do we see as risk capital? Capital in which you're willing to lose, right? And so just a couple examples to break it down for you to make it very, very simple. If the capital in which you're trading with you need for groceries or bills at the end of the month, week, that is not risk capital, right? That's actually capital in which you need and you can't lose. And we even break it down even further down to if you are looking to use some of that capital for a concert at the end of the week, or honestly just a better quality of life, then that we see as not risk capital. The reason for that is if you are thinking, so sorry, I was reading Steven's comment. So if you are thinking about the risk in terms of how much money you need to make or how much money you're unwilling to lose, you're not thinking about the trade. And so what we like to do each week is break down the markets in terms of segments and just approach what exists, right? All markets move. As a trader, you're taking the best risk for your reward. Sometimes it'll work, sometimes it won't, right? And so if you're able to stay in the pocket, stay in that flow state, we see that as a better mechanic for trading than forcing your will on the market, right? All right, so let's do a bit of house cleaning, and we have a competition to talk about. So there is and let me pull this up just to make sure that I am saying everything correctly, but there's a Bookmap Blue Jacket competition today. And so by submitting trading insights and screenshots to LinkedIn, X, or Instagram, or all three, with the hashtag #FreeBlueJacket, traders can win 3 months Global Plus with stocks or futures data, the Blue Jacket Discord icon, an invitation to the Bookmap Academy, and a physical Blue Jacket so they can show off their win at home too. So make sure to check that out. And if you have any questions on it, either you can go to bookmap.com/blue jacket, right? And everything's broken down here. Let me get rid of that. In terms of what you have to do, qualify, and how you participate, or you can come into the Bookmap Discord and check it out in there as well. So make sure to check that out. It starts the 1st of October and ends the 31st of October, so on Halloween for those who that celebrate. All right. That's the house cleaning. Let's jump to the agenda of the day. So as I kind of mentioned, we take a top-down approach to markets. So what's going on in the macro? How's that kind of impacting the global landscape of risk, risk on, risk off, right? And then we get down into the weeds of things. And when I say weeds and I say short-term duration, honestly, anything within 30 days in is what we see to be short-term duration. And we even look a lot shorter in terms of the weekly duration because we typically hop on each week. So in terms of macro, what's kind of going on? A couple things. One, we got an all-time high basically across the board in terms of equities. And so we've seen just a melt up continuing. We got an all-time high in Bitcoin twice already. So once Saturday night into Sunday, and then today during the regular trading session in the US. So currently Bitcoin sits, and let me pull it up over here. Sits right around 125.5, and we saw prices all the way at 126,200. And then we also saw that obviously in the ETFs as well. Those were pricing in new highs. And broader kind of trend has been higher, right? And so on a macro sense, everything looks good. The bid started to come alive after kind of that 2-day crash into the end of the quarter last week, right? So Friday was that low, or 2 weeks ago, apologies. And then once the new quarter opened up, we remained bid and continued the bid through this first week. So we see tomorrow to be potentially a big day, right? We monitor kind of time zones and time periods. And so first 7 days of trade of any month we see is very interesting. So let's see how it kind of handles over the night. But we'll break it down in terms of the price map, and then we'll take a look at Bookmap as well. But as far as macro, those are the news events that are going to hit the headlines. Ethereum is a bit off of its all-time high, so we are actually only at a 47.32, and I believe we were right around 5,000 for that all-time high. So some catching up to do in terms of price that we could potentially see if we were to catch an all-time high as well. So yeah, I'm seeing an all-time high in Ethereum on the Deribit futures right around 4,957. So just in front of that 5,000 print. We have not gotten a 5,000 print, but it absolutely is one to watch. So when we dive into kind of the outlook, we'll take a look at that as well. Outside of that, the government shut down here in the U.S., and so that was an interesting event. We haven't seen that, I believe, since 2013. And back then, S&P 500 returns were muted. During the shutdown, they were negative 10 bips the week prior or week before the shutdown, and plus 60 bips the week after. So while it seems to be kind of a negative headline and all these kind of things in terms of historically what's happened, it was relatively muted, and then the resolution actually created a positive boost. Over the weekend, we saw Hamas had a deadline, right? And so some negotiations continue there, which is positive. And then beyond that, NFP last week, because the government shut down, is pushed back. So a lot of moving pieces in terms of economics, in terms of the Middle East, right? And a lot more kind of going on, right? So even in South America, some more just global pieces to monitor. But for here now, the trend is higher. All-time highs is not a reason to fade a market. It is a reason to take a step back, even if you're short, and say that there really is no defined cap to this market. So right now we're watching price action, and then we're also watching our analytics and data. So let's dive into those, and then go through it. So for those that don't know, we launched our website this year. So very happy about it, and we kind of touch on it each session that we go through. It's DARMAcapital.trade. Feel free to check it out. But always I talk about here is everybody likes freebies, everybody likes free stuff. Head over to our sign up page, and you can go through. You'll see all of our data and analytics that we're going to talk about today, but then you'll also see a free trader assessment and education, right? So all of our education at this particular point in time is free. So if you like everything that we talked about today, you absolutely can dive into our education and our ideology for free. So all you got to do is register, and then go in and fill out all of the information. And then it also comes with a trader assessment, right? And so I actually am already registered. So let me pull up what you'll see. And so you'll come over here and you'll see my personality profile, right? And go through this, right? So go through this and answer it all, and then you will get feedback on who you are as a trader. So we have it kind of catered towards traders, and I really enjoy it, and we really enjoy it because it gives you insights on who you are, right? And so it helps us kind of as a team understand who you are as a trader. We see traders to be under 3 classes, right? So class 1 being discretionary, class 2 to be more of a hybrid approach, right? Or a teams approach, which is either they have automated assistance or there's more of a team approach. So you have checks and balances through risk department, you have through a risk-taking department, those kind of things. And then we also see the third is kind of a fully systematic trader, which is no point and click whatsoever. They build systems and take advantage of opportunity that exists on a fully automated and systematic approach. So that will help you understand who you are as a trader. And then on the education front, you can go over and you'll see there are 3 courses. You can click there. And then you can dive into, there's a ton of different modules in each of which, and then there's quizzes that you can also dive into. So it's all free. If you enjoy the stream, check it out. Give us feedback on that. And we really appreciate it. So let's dive into this week's outlook. Let's start off with Bitcoin, because we got an all-time high. So that's going to be first and foremost hitting the news wires over the next 24 hours, and already has. And then we'll go into the weekly. Cool. And then for those that don't know, we support many different time frames. For the most part, what we talk about here on the Bookmap stream is the weekly. The reason for that is we're on every week. I actually was gone last week, but for the most part, we're here every week. So we give pretty frequent updates, and then if you have any questions, you can reach out to us in the Discord, and we can do some write-ups there as well. So so here's the weekly, right? And so one thing you'll notice is the directional actually opened up under the market, and part of that reason is last week was a runaway trade, right? And so we always start our week looking at the directional. Over it's positive in terms of price, under it's negative in terms of price, right? Classic pivot, make it super simple, do not have to overcomplicate it, right? So as long as it holds that figure, that is very important. One second, I think I have a notification. Okay, cool. Sorry about that. I had a phone call. Okay, so over that's positive in terms of price, and then we always talk about the R level, right? And so R level is dynamic in terms of the price map. It shifts every single week, and it shifts every single duration. So we have daily, monthly, quarterly, yearly, etc. And so each of which will have a different kind of outlook, and it all helps paint a larger picture for us. So with the R level under the directional, right, that's positive, and that's our sentiment bias. So if sentiment's positive, price bias is positive, then we are fundamentally positive on the market, right? And so the next thing that we need to look at from a fact-based approach is, where did we close last week, right? And so we closed right at the previous week's close, right? So 122.5, and from there over it's positive. And the reason for that, you pull up Yahoo Finance, that's going to be a green chart that you see, right? Just fundamentally how we price a positive week, right? And so if you have all those different factors, it's a positive week, and so that's positive. And so you see all these other kind of lines right here. We're going to kind of disregard those. We absolutely take a look at it, but basically we're over the previous quarter's high, and that's kind of an obvious statement. The reason for that is we're at an all-time And so the next thing that we need to look out for is we're at the UP. So the UP is 126, 114. We tested it today almost to the tick and rejected. So if this market wants to continue higher into that trend, then what we need to do is it needs to base over 126, 115 basically, right? As long as we can base over that, that's positive. Otherwise, this market's at risk to rotate back lower, and that line in the sand for kind of that rotation back into the digestive trade is right back to the directional, but it's more defined at the previous week's close. So that's kind of just a short little breakdown of the market. But we also break our markets down in terms of state, structure, strategy, right? And so when we say a state, that's our expectation for the market, right? So the market currently is in a bull trend, right? So what does that mean? It means that it's typified by a market that continues to make higher move highs and higher move lows, or positive structure, right? If the market continues to hold structure, further gains should be expected, right? We just defined that, right? We're in kind of this trending state right now. If we break under these previous week's close, that is a new low. That's kind of a structure break in price. That would be a problem, right? That would bring the bull trend into question, and potentially this would shift into a more digestive state, right? These are dynamic. So just because we're talking about it in a bull trend today doesn't mean it has to be there tomorrow. These will shift all the time. The next piece here is structure, right? And so we kind of talked about that. R level under the directional is a positive price structure, right? So the R level below the DP is a price band supporting the underlying positive bias. Any weakness in this session is expected to bottom out above or within this area, right? So DP down to the R level, that's our expectation for the support of the market to hold, right? If it doesn't, that puts the whole market state and the market structure in question, just to make it incredibly simple, right? Price can't hold, it can't hold. Price is the only truth we really have, right? And so for that reason, the expectation is this area down here, if we do get a break, is a break to buy until it's not, right? Where it's not is right under this green dash line here, and it's defined risk, makes it super simple. Next is talking about strategy, right? So, because we're in a bull trend, because the structure of the state is positive, the optimal areas to buy are what we just talked about, right? However, right now, because the market is scaling higher, what we need to think about is kind of the hedge themes. And hedge themes is basically to bring the positive kind of bull trend into question, right? And so that is a sell UP reversal, and that's a sell directional breakout. So basically, if we get a price that trades all the way to 126 and 127 and then quickly reverses, that triggers a sell UP reversal, right? And a sell UP reversal is a reason to put the momentum of the market in question, right? It does not mean that the market has to break immediately, but it is the first tell that the scaling is at risk, right? And so how do we see that play out? You get 127, quickly it pulls back here. The sell UP reversal, if it's going to hold true, initially targets the directional, right? And so we see that to be kind of like a trap, right, in markets. And so when that happens, right, you get all those buyers that come in and they buy the all-time high, and then immediately they're met with sellers, right? And typically those can be strong signals, especially paired with some significant levels like an all-time high, because you get a lot of chasing action that happens around those levels, right? And so if we get a price to 127 that quickly reverts right back to 125.5, we are absolutely watching that for a potential trap and a rotation back down to 120, right? Has it happened yet? No, right? Has structure broken in terms of price? No. So we're talking about scenarios of for the rest of the week, right? The sell directional breakout is once we complete a sell UP reversal, which is quickly through here and revert right back down. Then a break under 119 is a sell directional breakout, which targets the R level, right? And so in that scenario, it tees right back up for the optimal buy setup, right? But it would be quite a large trap, and it would be significant. All right, let me. I actually got to put some orders in real quick, so let me step aside here, and then I will be right back. Okay, cool. All right, markets are pretty active. So yeah, absolutely. This is what we're watching. A potential after an all-time high. Are we going to press over it? Or are we not? The question is in terms of risk reward and in terms of hedging, in terms of kind of locking in gains. This is the optimal place to do it, right? And so if there's questions about kind of ideologies of like when to best execute, it's always at the figures, right? So right before a breakout, and then you just buy it back, or right after, right? All right, so let's hop over. Actually, let's take a look at the Bookmap book. Let's see here. All right. So in the Bookmap, there is, let me take a look. Let me blow it up a bit. All right. So 126,500 is where we see some of that resting liquidity. So basically right at the top range here. So absolutely take a look, as that would line up for a sell UP reversal potential. And then 123. So right back at that previous week's close, right above it. Those are those are the levels to take a look at. So if 123 can hold, it's still positive, but it's more digestive. Bitcoin has volatility has been bleeding significantly, and so we haven't seen a significant amount of follow through. The market absolutely with an all-time high. There's no need to fade it yet, but it has lacked follow through in terms of all. So don't be surprised if all of a sudden we start digesting again. All right, so let's take a look at Ethereum. All right, so let's pull up the weekly here, and we'll break it down to the same way. All right, so same kind of thing here, right? Except a little bit different in terms of the R level. So this week for Ethereum specifically, we had the R level right at the directional. And so what does that mean? If we go over to the structure, right, that means no bias. So an R level in the middle of the critical range, which we see the critical range to be the UP down to the DP, signals a potential turning point in the current market state. This is a dynamic signature state with the potential to spark a low volatility one-way trade. A one-way trade for the balance of the session, or a sideways rotation around the critical range midpoint. So it's important to note that this regime, not a lot of clarity, but what does it tell us? If the market's ready to go, it's ready to go in a big way. Right, and so oftentimes when we're in this regime, you'll see a kind of a coiling around this R level, but the signals are defined at the CR plus and the CR minus. So the fact that we're over the previous week's high, see how we kind of just priced over that and immediately we jump? That's where we're looking for positive structure to remain. We're absolutely at a potential high point for this first initial move, right, which is that UP, right in alignment with that previous month's high. So exact same kind of talking point that we talked on with Bitcoin. The UP needs to hold, otherwise the market's at risk of falling back into that digestive trade. All right, so next piece here is talking about the state. So Ethereum, for the most part, hasn't seen that monster rally, right? And when I say that, absolutely over the last week, yes, we've seen a rally, but in a larger kind of instance, we're still in this digestive trade, right, where 49.57 was the highs, and we're kind of just bouncing back and forth in the 4,000s. So for that reason, we're in a neutral digestion market state, and it's characterized by sideways trading conditions with limited profit potential. Opportunities exist at the extreme or on both sides of the market, but directional moves are not expected, right? And so you can see down here that we have that red line kind of highlighted. That's the UP. Right, and so if we're going to remain in a neutral digestive state, the expectation is the UP is kind of the top, right? And we need to fall back down to the previous week's high and then just kind of complete this balance trade for the rest of the session, right? In sessions, we see to be close of Saturday at 0 UTC. So that is Ethereum. Let's talk a little bit about strategy. So strategy is optimal buy DP fade, right? So a buy off the DP down here, or a sell UP fade, which is exactly what we're in right now. So currently we're in an optimal strategy basis, the weekly, where you fade into this figure, right? And where do you put your stops? Basically 47.95 is where we see the sell UP fade to be out of invalidated, right? And so beyond that point, this market can really start extending. So why? We're really close to an all-time high. You could get a quick all-time high move to 50.61. It becomes the target, right? All right, excuse me. So technically the market is in a neutral digestive position with all balance indicators. The market is on the fence with the potential to go either direction or nowhere. Pick your points and have no expectation, right? So as the likelihood of this market trading sideways is high, use a buy DP fade or a sell P fade or UP fade to participate in a narrowing of the digestive range, right? And so what does that mean? Just because you're in a digestive trade doesn't mean you can't make money, right? It just means that the opportunity lies on the extremes and not in the middle, right? And so for that reason, you have a little bit more edge in terms of fading critical range areas versus just buying them, right? Why? Because in a neutral digestive market state, breakouts shouldn't occur. Otherwise, that state's in question. So the best way to tell that is when if you fade into an extreme level, so that 47.472, and we hold and price over it, that tells you that the neutral digestive state may be transitioning back into a bull trend, right? And you're going to be the first to know. And from a risk-taking perspective, it's the best risk for the reward, right? Instead of shorting the market here, expecting it to go right back down to 3,800, you're waiting for an extreme, right? You're waiting for price to come into your favor. You're waiting for the market to present an opportunity, in which it did. And now all you have to risk is basically 50 points for a potential 400-point move back down, right? That's how we as traders set up the best risk for our reward and take advantage of the markets, right? All right. So in terms of Bookmap, let's kind of pull it up. 47.50, where we have some resting liquidity. So right in alignment there with the UP. Again, it's a big figure. It's the high basically of the day today. You see some prices up in there. It's important to monitor that. That's the most important figure for the next 48 hours from what we see. Otherwise, this market's at risk of returning back to the offer. And that doesn't mean it's negative, to be clear, right? Anything over 4,400 is so positive in terms of price and sentiment. It just means that the digestive state is valid, right? And that can be a difficult trade environment to trade in, right? And then on the bid side, not so much stacked across the board in the 4,600s, right? Which is basically right in through here, but we don't see much alignment there. So 47.50 is where we're monitoring, and we see the alignment in Bookmap. So apologies on some of the breaking up during the session, but this is an important level to monitor, so we did have to get some stuff done. But we'll open it up for questions, and then if anybody has any questions, let me know, and post them in the Discord, and I will run through them. So yeah, so Steven said, I caught a nice long Sunday last night, exiting out today near 650s. Will we ever see ever deep pullbacks again? Those 50% retracements. Seems like those moves are nowhere to be found nowadays. Curious on your outlook. Yes and no. Couple things. The market fundamentally, and we kind of talked about this back in July, back when prices were like in the 2000s, that the bullish narrative is very apparent. And what does that mean, right? So obviously we have all these treasury companies coming in, and what does that do fundamentally to the market? That creates a cash bid to the market, right? And so what does that do? Suppresses the vol on the left tail. Why? Those buyers aren't leveraging up, right? Those buyers are buying spot and holding it. They're basically taking liquidity out of the market, and they're not going to re-enter the market, right? if that's the case, and they're wanting and willing to buy more, means you have a cash buyer to soak up any liquidity that's looking to sell. What price? It's a great question, right? We can look at market structure and analyze market structure, and that's what we do, right? But everybody's going to have their own proprietary way of allocating to the market. However, fundamentally, what does that change to the market? It does potentially take off those significant left tails, right? And so instead of a 75% drawdown, maybe now you only get a 60% drawdown. In terms of this market not having a correction in a large scale anymore in the near future, I think it's very soon to tell, right? If you look at where we saw major declines in the beginning of the week, or in the beginning of the year, we saw more than 20% declines in the equities markets. So there was mass liquidations across the board. And what is that? What is that fueled by? That's leverage, right? That is market participants. They're over leveraged and they're getting liquidated, right? And so at that point, they're liquidating their book. So if they hold Ethereum, they have to sell it. It doesn't matter. It doesn't matter what they hold. They have to shore up cash, right? So I think it's too early to tell how much of that left tail is out of the scenario. I do think fundamentally the market potentially is changing if there's a sustained real cash buyer. So to your question, that's kind of my outlook. There's no proof yet. There's no proof, right? So this isn't. Don't take it as a golden egg. It is something that I'm watching when it comes to kind of market fundamentals. All right, cool. All right, if there's no more questions, we'll shut it down, and then I will catch you guys all next week. So. Cool. Yeah, no problem, Steven. Yeah, if you have any questions, they're always great. So enjoy the week, and I will see you guys all next week.